We all understand the type of climate that we're dealing with. We're dealing with multiple offer situations.
I'd love to know sort of what's your why? What makes you tick? Why are you so successful?
Have a dialogue with your lawyer. Have a dialogue with your agent.
Both sort of passionate about sort of what we do.
Again, vet your agent to make sure that they're experienced and they're local. I like that idea.
No excuse to miss it on Saturdays from 8 to 9.
That's right.
WBZ.
And now, the show that gives you the latest and most relevant housing market news. Real Estate Radio Boston with financial expert Rick Scherer and legal professional Ali Alavi.
What are we doing with the interest rates right now?
Interest rates are phenomenal. We saw really a drop down of 0.3%. Wow. So 0.375% in interest rate over just a week and a half, 2 weeks, which is a pretty dramatic drop.
Now, I want you to sort of allow the listeners to appreciate what this translates into. So give me a flavor of sort of the savings we're talking about and why it makes sense for them to do it and the cost to the consumer.
Well, there's two different ways you can look at this. You can look at people who currently already own property. So people that hold mortgages now that missed sort of the refinance boom when I had brought my clients down to 3.25%, 3.125% on a 30-year fixed.
Right.
Okay, there's a few people down there. There's not a lot. There are people in the high 4s, in the 5%. People. I just refinanced someone that was at 7%. Totally missed the boat. I don't know where she was for the last 6 years. But so there's interest rate savings. You can take your rate from 5%, bring it down to 3.75%. Probably save yourself a couple $100. Oftentimes we can do it no points, no closing costs. So there's that. You can take your monthly payment of $2,000, reduce it down to $1,800.
Right.
Now you've got $200 to spend, and hopefully you're saving it or putting it into retirement or kids college education. Calling Mike Abramo, setting that stuff up. That's one way to do it. Another way to do it is if you have an interest rate and you're in the 30-year fixed and you want to stop going backwards, you want to go forwards, maybe looking at a 25-year or a 20-year. If you want to see really big impact on savings on interest rate is reducing the term on your mortgage. When I've been making phone calls, you've been answering phone calls over the last few weeks. Little rocky in the markets, huh?
Very, very busy. We haven't seen the type of volatility, meaning the market's going up or down 200 or 300 points since March of 2011.
Wow.
Yeah, we had a 10% pullback literally between October 5th and 9th.
Wow. So what does that translate to the investors today? I mean, what are some of the questions that you're getting? I mean, obviously, I think the first instinct for any investor out there is panic. Oh my God, I've got all my money out there. I'm losing my shirt. What do I do? Some of the questions that you're being asked and some of the answers that you're giving them.
People definitely do worry. They should. Okay, especially older people. They have a nest egg. They don't want to lose it. The markets historically have gone up 8% a year. To lose 10% within a course of a week is a lot of money. Okay. What you have to take a look at is what are the factors that are causing the market to do that. One day it was Ebola. Okay. Another day it was ISIS. A third day it was China. Is their economy not going to grow as quickly? Another day it was the banks in Europe. They said they may need help. So taking a look at it, don't look at the individual things. As you can see, the past 2 days the market has rebounded quite a bit. If you're a long-term investor, within reason, if you have a good allocation, good quality investments, you want to stay the course. You don't want to panic.
What do you mean by good allocations?
Meaning if you are older, right, and you're retired or whatever age you are, you should have a good allocation, some money in bonds, some money in alternative investments.
Gotcha.
Maybe the stock portion has dividend-paying, good quality stocks. So you want to have a really good plan in place and a good investment plan. 1 week really shouldn't shake that up and make you change anything totally different than what you put in place, unless the plan that you constructed originally is poor.
So if you are younger, you don't necessarily have to panic or really change the existing mode of investments that you have if you have the requisite diversification, because you can afford the sort of the passing of time for you to be able to recover the losses.
In working with the buyers, what we realized is that a lot of agents would list a property with the first showings at the weekend open houses. Historically, that was usually a Sunday open house. Last year, we started seeing people, ourselves included, moving into both a Saturday, Sunday open house. The problem that I quickly saw with working with my buyers, if they're away on a weekend, if they have a commitment at a wedding, first showings on a Saturday, Sunday, offers are due in by Monday at noontime, and away you go. And buyers were missing out on it. For me, that's not helpful to the buyers, and it's certainly not productive for the sellers.
Right.
So I started introducing with my seller clients what I call a commuter open house. Let's try to set up something, whether it's a Wednesday night or a Thursday night after work. Sometimes it's also a lunchtime showing, like a Thursday lunchtime. But for that person who's commuting from work, to catch them on a break or after work in the evening, where they can come in, view the property, even if they're away on the weekend, they're able to come in on that Thursday evening.
Right.
Huge benefits for them. One is that they're able to see exactly what their commute would be like, which is why I started calling it a commuter open house. A lot of
Very
times,
interesting.
A lot of times on a weekend, you're coming from somewhere else on a Saturday and Sunday, not from work. You don't know traffic flows and patterns, what the train's going to be like. So to do it in the evening, they can really see what their commute is like, and it's fascinating. You'll standing in the open houses. And buyers, you'll hear them, oh, honey, this is how long it took me to get here. And it only took 4 minutes from the train, and it was about 17 minutes on the train.
Correct me if I'm wrong, but I think that you learn how to effectively put together an estate plan by seeing other people's failures. And no other people's failures is sort of more visible than some of the celebrities that we've heard about. And you have some really interesting stories that have come to light as a result of very well-known individuals that have either attempted at putting together an estate plan and have failed, or essentially did nothing.
Absolutely, and these span the ages of when popular culture, going back to the 60s and all the way through to
They got
current.
Marilyn Monroe in here. You've got Jim Morrison. I mean, this all the way up to present.
Absolutely. And in these examples, particularly with the few that you just mentioned, they left assets to someone they were very close to or trusted, and that person then died shortly thereafter. So the money bounced to parties that were unknown to them. So here you had Marilyn Monroe leaving a large chunk of her estate to her acting coach. Her acting coach then died, and the money went then to his third wife, and who she never met.
Wow!
And this woman was still dealing in her estate well into the 80s, and even actually more recently, because I think her gown that she wore to JFK's inaugural was more recently auctioned off. So she was inheriting that money all the way through to today. So that was.
But there was so there's a message there, right? So obviously it's a interesting story. We're talking about millions and millions of dollars worth of gowns and sort of memorabilia that were sold in this course, but what's the message there? She could have prevented this from happening. I mean, and we could have still met her wishes, which is essentially allowing her acting coach to be managing her affairs after her death. But there could have been safeguards built into this, right?
Absolutely, and usually that involves some level of trust planning and also really thinking about different contingencies. I mean, I've seen this in my own practice where you have people treating people as though they're their children. In a second marriage, and they leave property to their stepchildren, and then because of the order of deaths, it ends up with their spouse's ex-spouse. So I mean, this property, just like it did here, can really bounce all over the place unless you think about it and have some controls on it.